What is going on, guys? Welcome to Stock Talk with Nico Criticos. Today, we are going to be taking a look at C3.AI stock because this stock is now up about 26% on the year, and today the stock is up over 5%. So the good news is that Microsoft is expanding their partnership with C3.AI to build up their artificial intelligence software and work on the cloud computing platform. So that's the good thing. As far as this company's financials go, we can see that last 12 months they did 325 million in revenue, and they did negative 278 million in the bottom line. The last 5 to 10 years or so, we can see revenue growing at roughly 27% per year. So this is a pretty nice growing company. But the problem is free cash flow and net income are both negative and have been getting worse for the last 3 or 4 years now. So that's the problem. The market cap, this company is trading at a $4.6 billion valuation. So it's kind of up to you whether or not you want to pay 4.6 billion for a company that is losing more and more money. Now, analysts have them doing still negative EPS this year and next year. So who knows? It could be best case scenario, it probably means 2 years from now they're profitable, but it's probably more going to be like 3 years unless they can do it in 2027. It's probably going to be 2028, to be honest. No, I shouldn't say 2028 because their calendar is off. So we'll say 2027. Now, as far as growth goes, we're looking at 23% growth expected this year and then 20% next year. So definitely good, strong numbers, but not anything amazing. They're not growing at 40% per year or something crazy. So I just don't see why I wouldn't want to pay this price for where this company's at right now. I would be interested in this if it was at a cheap valuation. If this was at, I don't know, I mean, probably like half the price of what it is today. Because think about this. If 2 years from now they finally hit, let's say they do $1 EPS. How long is it going to be before they get to $1 EPS? Probably like 3 years, right? Some 3 or 4 years. So that means, I mean, if this stock were to keep going, it would be $60 or even $70 by the time they got to $1 EPS, and then you're paying 65, 70 times earnings. So I don't know. I wouldn't want to pay this premium on this right now. I mean, they're going to do 382 million just in revenue, and I'm going to pay 4.7 billion on this. I don't know. I don't see any room for growth or appreciation in the stock if they're already pricing in a couple of years of growth. That's what you always have to consider is even if they're likely to keep growing and eventually reach profitability, if you're valuing the company based off of the numbers 5 years from now, then that means the stock price should pretty much just stay the same. That means the stock should keep trading at a $5 billion market cap for the next couple of years. So that's where I don't see a whole lot of reason to invest right now. They do have a good balance sheet. I mean, in terms of the ratio and the cash, it's good. 750 million in cash. But the equity on the balance sheet has actually been decreasing the last couple of years. That's the bad thing. Dividends going down, shares outstanding going up, which is bad, which is normally what you see with companies that lose money is they have to issue more shares. So it's an interesting company, but for a money-losing company like this, I would only pay a very cheap valuation, probably something like $1 billion or $2 billion, really. But even then, I don't know. I'm a big fan of buying companies that are profitable and that show consistency because what this shows me is that they're probably, I mean, this one's a little bit different because they're not super big yet. They're only doing 300 million in revenue, which is not a ton. But once this company is doing close to $1 billion of revenue, they need to be putting up a profit, right? I want to see at least a 10% margin. So those are just the things that kind of scare me with companies like this is do they have a bad business model? Is it not very profitable? And I just like to see consistency in the numbers. So that's my analysis for this one. Not a huge fan at the moment, but I think they're in a good industry. I think they can do great things with Microsoft. It's just the valuation doesn't make sense right now, and the profitability is not attractive. So those are my big things with this. Thank you for watching, and I will see you in the next video.